During the last 10-year period, we had paid 30 billion as dividends and levies. People's Bank has done extremely well there. Our liquidity levels are at the best ever position ever. Even right now, our all currency LCR is about 300%.
Relatively speaking, banks are complex institutions to lead, mainly because their businesses are funded with customer deposits and less with shareholder funds. During Sri Lanka's economic crisis that started in 2022, challenges banks faced increased as loan quality deteriorated. Sri Lanka's government had to restructure its international sovereign bonds, and losses at state-owned enterprises, which were banked too by Sri Lanka's commercial banks, grew. Clive Fonseka took over leadership at People's Bank in the midst of these challenges, and he has steered the bank to record profitability in the last 2 years. Clive Fonseka, welcome to Echelon.
Thank you, Shamindra.
Let's start here, Clive. Sri Lanka's economy has entered a new phase, so to speak, right? From one of crisis and crisis management, the economy has emerged into a clear growth path. All the key indicators are suggesting that things are moving in the right direction as far as economic growth is concerned, corporate profitability is concerned, and consumer spending is concerned. You, as chief executive of People's Bank, manage the second largest asset pool in the financial services sector. What does this mean for People's Bank? How will you have to change your approach here?
There has been a transformation of the way that we do business, and there has been a change in our business model initially. So earlier the model was, Shamindra, we used a 751 number of branches to mobilize deposits, and those deposits were mainly channeled towards the SOEs. As of 2022, about 56% of our loans and advances were for SOEs. After this IMF arrangement with this restructuring of the SOEs and the state banks, there has been a change, and now there's not much of a requirement for these SOEs to borrow from the state banks.
Right.
So now the pricing is on a cost plus basis.
Sure. The pricing of state-owned enterprise services to consumers is on a cost plus basis.
Yes. As a result, the exposure has come down drastically. From within a period of 2 years, our lending to SOEs as a portion of total loans and advances have come down from 56% to 35%.
Wow. In a 2-year period, you're saying?
That's right.
So that's from about 2022 to end of 24.
That's right.
Right. Have you an estimate of how much in rupees this amount is when your exposure to the loan book exposure to state-owned enterprises came down from 55 to 35?
Initially, it was about 700 to 800 billion was for SOEs.
Total.
Yeah.
Right.
So right now, there's a drastic reduction there.
It's maybe now 400 billion?
Yes,
approximately?
less than that, yes.
Okay, less than 4. So you've had to redeploy about 400 billion into new loans and advances.
Yes.
Right, Clive? How did the bank manage to do this over a 2-year period?
Earlier model was pretty easy.
Right.
We were used to lend to these SOEs against a treasury guarantee.
Sure.
3 or 4 people for one SOE, the credit paper would have been sort of very basic, 3-4 pages. So it was mainly lent on the back of the treasury guarantee.
So basically, you've been CEO throughout this period, right? This transformation from when it started in 2022.
I've been the CEO from 1st of January 2023.
Right. So you have held that position, or you've led the bank through most of this transformation.
Yes.
This is not merely about more detailed credit papers, right? A culture, a way of working and thinking in a bank has to change. How did you kind of manage to do that at scale over a short period of time?
We basically empowered our branches and the regional officers to do private sector lending.
Okay.
So that is SMEs, personal finances, and corporates.
Right.
Those were the three main areas. We understood that some of the expertise will not be there. So we conducted training programs, and even how to go and speak to a potential borrower. We gave them checklists, and then we have 25 regional officers in the country. So we implemented regional credit units in each and every regional office. So branches, when they see a potential customer, so they do the initial sort of discussion, then this potential customer is channeled towards the regional credit unit. So they do the sort of, they are experts with regard to the credit and then recommend the facility that is required.
Sure.
So that is what we did. Then on top of that, we opened 6 export hubs also. So that also to mainly facilitate trade finance business, which were a main requirement of these SMEs and these corporate customers in these regions. So,
Right.
so we conducted mainly training programs to educate our staff, because all this time their main task had been to mobilize deposits. So we had to retool them, we had to train them, and those were extensive programs.
Okay. If you look at the several challenges that you as the leader of the bank have to navigate through, you have capital and tier 1 capital and tier 2 capital on one hand. You have your loan book on the other hand, the loan book health, how you're going to grow the loan book. You also have to manage liquidity, right? Make sure you have the money to kind of pay things when they become due, right? Basically. When you look at this stuff, what do you think is most challenging? And of course, on top of this, you have the people, the culture, the relationships with your key stakeholders to navigate. When you look at these things that are in front of you, as a leader, what do you think are the most crucial things to get right today?
I would say liquidity.
Right.
Then along with that, the profit and loss also matters quite a lot, because not a single customer will place their deposits with a bank or a financial institution that is making losses. I would say third thing which is equally important is the capital. It's a mix of things that we need to be conscious of.
Right. You said liquidity. Can you explain to me the context that leads you to suggest that liquidity is also one of the challenges? Has it to do with your past of high exposure to state-owned enterprises? I mean, everybody knows People's Bank is one of the main bankers to the Ceylon Petroleum Corporation and the CEB.
Yes, because the issue that we faced in 2022 and 23 was mainly due to the liquidity of dollars and Sri Lankan rupees.
Sure.
At that time, the model was basically SOEs were mainly reliant on the state banks, and whatever the losses that were booked was parked at the state banks. So as a result, when this dollar crisis came, when the country faced the economic crisis, some of the LCs that we have opened for oil, coal and fertilizer, etc., we were not in a position to sort of settle, because we had opened these LCs on the back of written assurances of authorities, and because of the country situation, they were not in a position to honor those written assurances.
Yes, so basically the government which gave you these assurances, I mean, we all know, I mean, Sri Lanka went kind of bankrupt in that period, right?
Yes. So then we got into difficulty because with these foreign lenders, LC beneficiaries, and with even some of the top high net worth individuals and corporate deposits. We had to take extensive measures to come up with repayment plans to give them an assurance as to how their liability will be solved. So it was very difficult, because none of the banks in Sri Lanka faced this situation as badly as People's Bank. Our business model was, at that time, we were mainly an importer's bank. Export remittances share or the export share was nowhere near whatever imports that we did. We were relying very much on the interbank market. When that avenue was shut, bank got into difficulty. So that's what I said, liquidity is the most important one. So we have learned our lessons.
Oh, right. So throughout this transformation, People's Bank has become a large player in the market where you receive foreign currency remittances or export proceeds, whereas previously this was not the case.
The due attention was not paid because, at that time there was a robust interbank market. So it wouldn't have been, it was not a necessity at that time. The crisis only compelled us to look at all these measures, Shamindra.
Okay, so liquidity is one of the key things that you said you are watching as chief executive. There's a couple of other things. Can you tell me?
It's mainly the other one is a P&L.
Sure.
Because it's extremely important because we have government is a sole shareholder. Then we need to manage our staff, pensioners, unions, and a whole lot of stakeholders, even customers. So as far as the profits are concerned, so we need to be mindful of our profitability because ultimately we are benchmarked against the state and the private sector banks. It's extremely important that we monitor the profitability of the bank. Thirdly, is the capital adequacy because that is one of the most important aspects. So we have to be very mindful. So we have to be extremely mindful because of this change in the business model. Now we are going into the private sector. But however, earlier when we were lending to the SOEs, we were mainly lending on the back of valid treasury guarantees. So then the capital allocation was very much less. But now for the SMEs, for the corporates, for the SMEs, it's very much different. So because of that, capital adequacy is also extremely important.
Clive, as a leader, I'll ask you to reflect on this transformation. What were your big learnings as both as an individual and as a leadership team, I think? What did you learn through this process, you think?
If you ask me, the biggest learning was the can-do attitude.
Right.
We have our staff is excellent. So, and they're very adaptable. If you provide the proper leadership, proper training, they can do anything. So that has been demonstrated. So if you look at our private sector lending in all sectors, even retail, SMEs, micro and the corporate banking, those are the key sectors, there's a drastic increase. Earlier, we were not even looking at some of the top corporates. If you see now, some of the top corporates, we've gone and lent up to the single borrower limit.
Okay.
So it is not one department per se. It's a sort of a, collaboration of all the departments and going towards that target, Shamindra.
Right. As an economy and as a bank, People's Bank and the economy is where it is today. But if you look back a few years, look back at when your tenure started at People's Bank, there was a lot more uncertainty because Sri Lanka's international sovereign bonds had to be restructured. There was the potential that the rupee bills or rupee bonds will also have to be restructured, right? If you look back now, what strategies and approaches that you as a leadership team took at People's Bank helped you navigate the uncertainty around the restructuring of Sri Lanka's sovereign debt, whether it be rupee or dollar?
Shamindra, we did not have a substantial international sovereign bond portfolio.
So you didn't have a dollar exposure. That is huge.
Our issue was the dollar exposure to the SOEs.
Sure.
So as of 2022, TPC had exposure to about 1.1 billion to People's Bank.
Right. So when you say dollar exposure to SOEs, you're talking about state-owned enterprises like the Ceylon Petroleum Corporation, Ceylon Electricity Board, and possibly Sri Lankan Airlines?
CEB, they did not have any dollar exposure.
Dollar exposure, right.
So it was mainly Ceylon Petroleum Corporation and Sri Lankan Airlines to a certain extent.
Sure.
That is very much less compared to the CPC's exposure.
So when you say 1.1 billion, that's in dollars you're...
That's right.
Okay. It's a massive amount of...
Yes.
Consider,
Indeed.
For context, Sri Lanka's restructured international sovereign bonds were $12 billion. And here you're talking about $1.1 billion.
That's for People's Bank.
That is just for People's Bank.
Yes.
Right. So, continue.
Issue was basically with the SOE restructuring. Unlike the international sovereign bonds, when the SOE restructure came, we did not have the rupee option.
Sure.
So as you know, when the international sovereign bonds were restructured, local banks were given an option where 70% of the amount was paid in Sri Lankan rupee, or it was given as a treasury bond.
Sure.
So then for US dollars, SOE debt, unfortunately, we did not get that option. So it was basically converted as a longer tenor treasury bond. So when the central bank, as a prudency measure, came up with this requirement where 15% of the exposure should be kept as a special reserve and that should not be taken into the computation of the capital adequacy, that was an issue.
Right. Just to make sure we understand this clearly, Clive, right? Is it so that you got a rupee security in return for the dollar exposure to the Ceylon Petroleum Corporation?
Ceylon Petroleum Corporation dollar exposure was restructured in dollar itself.
Okay. Right.
On the other hand, when it was international sovereign bonds, 70% of the exposure was given as a rupee bond. So
right.
Then this central bank norms was not applicable for that.
Okay. Right. Whereas with your restructure, the central bank or the capital adequacy regulations came down on it full force.
Yes. If it's a private bank or any other state bank, for ISB, it was applicable for only 30% of the component.
So what does this mean in a practical sense for your balance sheet? I'm sure this is, as CEO, you spend a lot of time looking at your assets, which is mostly the lending you have done, and your liabilities, which is shareholders' funds and any other way of financing these assets, right? You're spending possibly a lot of time looking at this, right? What was the impact on your balance sheet of these actions?
Our impact to the capital was substantial. So
right.
Central bank provided us with a window of 2 years to take this hit.
Sure.
We, as a prudency measure, we took the full hit in 2024 itself. So after taking this hit, our total capital adequacy ratio was 16.5%, whereas the requirement was 13.5%. So we had a cushion of 3%.
Sure. So despite this hit, your capital adequacy is very in a solid place.
I would say we are in a comfortable position.
Does that still mean, though, that you still have challenges around capital? Is it structured? Is the capital structured very well?
There are challenges because
right.
Unlike the previous years when we go and lend to the private sector. So you need to provide capital for that. So when you lend against treasury guarantee, it was not the case.
Sure.
So obviously going forward, People's Bank will come up with measures to boost the capital. So that has been happening on an ongoing basis also. Even at the fourth quarter of last year, we raised 13.5 billion subordinated debentures to augment our capital.
Sure.
So that capital augmentation program, will continue for the foreseeable future, to be in line with our lending operations.
So when you raise a subordinated debenture, that comes into so-called tier 2 capital of the bank.
You're right.
Right. How are you with tier 1, so-called tier 1 requirement, which is the shareholders' funds, what the shareholders put in as equity, and also retained earnings come into tier 1 mostly, right? How are you on tier 1?
See, if you look at the shareholder funds, Shamindra, People's Bank is a bank where the shareholder funds are at the minimum.
Right.
In our 63-year-old history, government as the sole shareholder of the bank has pumped in only 12 billion. That's very much less compared to the other state or the private banks. Even a small private banks, relatively, I would say, mid-sized banks, they have 23 billion shareholder funds.
These are banks with a trillion rupee balance sheet or less than trillion?
Less than trillion rupee balance sheet.
Whereas yours is like 3 trillion.
3.3 trillion, yes.
Right.
Then on the other hand, even for this, during the last 10-year period, we had paid 30 billion as dividends and levies. People's Bank has done extremely well there.
Sure.
So the issue was basically when this SOE or the CPC restructure came in. So because of this central bank prudential measure, when it came into being, there was an in-principle agreement with the authorities for us to get a deferment with regard to the dividends and the levies. So those discussions are ongoing.
Sure.
So along with this profits for this year, now this year our first quarter profits are due very soon. According to the initial estimates, we've had the best ever first quarter results in our 63-year-old history.
Right.
So these two will get augmented for the capital going forward.
Clive, you also then have to sort of meet expectations of a key stakeholder, in this case, employees, right? When they see fantastic profits, there is usually a demand for an incentive, what do you call a bonus in the industry. But on the other hand, you have this other challenge of, you need to retain as much of this profit for it to be going to shareholders' funds or tier 1 capital. You also have to negotiate with the government on how much of this you can pay out as dividends, considering you need to maintain liquidity. How are you managing these three things? Now, you got to engage with two or three key stakeholders, employees being one of them, and the owner of People's Bank being the government, which is an expectation on dividends. And giving these profits out means you will have liquidity challenges. On the books, there's fantastic profit, but liquidity can become a challenge. How are you navigating this?
So let me first talk about the employees.
Sure.
See, we are the only major bank in this country where the number of staff has significantly reduced from what it was in 2016.
Right.
Why I took 2016 was that was the initial years of the digital journey of this banking sector. So if you take compared to 2016 as of now, there is a significant decrease of 700 employees of People's Bank. People's Bank is the only bank, there has been a decrease of the staff numbers.
Give me a sense about what your asset book, assets were like.
Good question. As of 2016, our total assets were only 1.3 trillion. As of end of 2024, that is 3.3 trillion.
Right.
So that shows as to how efficient and effective of our staff is.
There's been a massive productivity jump, and what would you attribute this productivity jump to?
It's mainly to the digitalization,
right,
and proper ways of doing business. Like we've implemented new policies and procedures, some system developments, and we've made efficient the sort of the way that we operate. So, if with regard to your second question, with regard to the payment of the bonuses and the incentives, so. As you know, People's Bank recorded the best ever results last year. Even then, I can tell very responsibly, whatever we paid as bonuses and incentives to our staff there had not been any deviation compared to the previous years. There had been previous years where we have paid the same amount. So. And the other thing is that we've never even contemplated, even at a management meeting, no, definitely not at the board, to seek any taxpayers' funds as a capital, and to boost our capital.
Sure.
So nobody can sort of criticize or pinpoint fingers to People's Bank and say, you're seeking public funds, then using those funds to pay incentives to the staff or bonuses to the staff.
Sure.
And with regard to the liquidity,
yes,
your third question, there, Shamindra, I mean, our liquidity levels are at the best ever position ever. Even right now, our all currency LCR is liquidity coverage ratio is about 300%. So, I mean, since this is not a sort of any sort of out of the ordinary sort of incentive payment or a bonus payment. This can be very easily managed.
Clive, you will be very keen to grow your lending, I suppose, given that the economy is now very clearly on a growth path, and kind of maintain or expand your share of banking business in Sri Lanka. How do you plan to do this? Now, you in one sense, you've almost changed the composition of your assets, right? From a lot of lending to the government, that is now about a third and declining. How will you want to take advantage? How will you strategize to taking advantage of the opportunity that's unfolding?
See, this transformation and the business model change is a blessing in disguise, Shamin. That's how I look at it.
Okay.
So obviously, along with this country's growth projections and what we are seeing in ground level, so there's a lot of potential. So, I mean, there's potential on corporate banking, in SMEs, on personal finance or retail lending, even sort of credit cards. So, it's a case of, managing these funds to the allocation.
Sure.
So that is what we are doing right now.
Sure.
So when you have a bank like us, where there's 15.3 million customers, that's about 70% of the population has an account at People's Bank. So we see a lot of data. We see amount of the salaries that they get. The account, how the accounts are operated. So it's very much easier for us to take decisions based on correct data.
Right. When so much of the population are your customers, you have a very good picture of people's
of
income
course, it's the
and
same
habits.
with SMEs and the micro also.
Okay.
Because People's Bank, traditionally, we are very much close to the customer.
Sure.
So if you look at most of the top-notch corporates of this country, their beginnings have been with People's Bank. So they generally come to People's Bank. One is due to the accessibility, and generally People's Bank, there's this notion in this country that People's Bank listens to the customer, and we support them. That is why even right now we have many schemes which may not be profitable in the short term. Even for young entrepreneurs, there are facilities we provide for them for investments and for working capital starting from 7%. For women entrepreneurs, for instance, there are facilities for working capital and for investments starting from 8%. Wow. And you'll end up to 100 million. And there's sort of a green financing, sort of for sustainable projects. We provide facilities at AWPLR minus 1%.
Sure.
So we always, as a responsible bank, we look at the long term and the future also.
Sure. When you're lending, Clive, you have to consider not all lending is the same, right? The risk profile of lending is different from one to the other. And also the impacts on your capital will be different from one to the other, right? You have to back some lending with more capital than others. So when you consider what's in front of you, how much capital you have, the kind of risk you want to take, where do you think the big opportunities are for People's Bank?
I would say, considering everything, it will be mainly from the SMEs and the personal finance space.
Okay.
That is how we look at it, because SME, because of this preferential treatment that we give, because we understand, because when we are very close to the customer, and because of the number of branches, a lot of SMEs and the micro, they come and even development finance, we do a lot of banking with them. Then on the other hand, for the personal finance, a lot of salaries comes to us. So that gives an advantage for us to give them tailor-made facilities. Sure. For the housing, even for consumption, even for credit cards.
Right. What percentage of your loan book is in SMEs and in lending to individuals currently? Do you know, and where do you think it'll go to?
Substantial portion is for SMEs right now. So this
when you
year,
say substantial, it may be 30%, 20 to 30%.
I would say it's about 10%.
Right.
See, basically what you need to understand is, all this time, we were mainly catering on the SOEs and the retail.
Sure.
Because pawning, is a product that People's Bank initiated.
And has a market leadership.
So that has been our strength until very recently. So SME, the sort of concentration has come about 2-3 years back. So that is there, and I think going forward, our major priority will be SME.
Right. So you'd want to sort of maybe double the size of the portfolio over the next few years?
Yes,
easily.
Yeah, already. So that is why I said, so these lending schemes that we have initiated, will definitely help us because, we are basically, when we go to our branch network and to our customer base with these lending schemes, there's a lot of demand. So I think this, from the country's perspective, as a responsible bank and being as a state bank, this is the right thing to do also. Because otherwise, there's no way that they can get financing for a startup in this country.
Your branch network of, you said 751, is that the largest such network in the country?
Yes, we have the highest branch network, and we have branches all over the country.
Right. So to explain to me this, Clive, right? You have the largest branch network of any bank in Sri Lanka. You also have this deep digital penetration. You were saying, a lot of your customers are using services digitally. Are these sometimes not at odds? Do you still need the large branch network? What does the branch network serve for you?
See, as per the Sri Lankan way of doing business, I think we are not in a position to consider a reduction of our branches right now.
Sure.
Probably another 5 to 10 years time down the line, that is doable. See, what we are trying to do is, Shamindra, so we are actively encouraging our customers to go into digital. If you have to take 100 transactions that can be done by the teller, as of now, nearly 85 of those transactions are happening through digital means. That I means through apps, internet banking, and through the ATMs and the CRMs. So we have to continue and increase this ratio. Otherwise, it's very difficult. There'll be a lot of congestion in our branches, and it will be very difficult for our branch staff to engage in lending operations.
Exactly. So you're shifting branches from previously as places that gather deposits to primarily look at lending, which means there's a face-to-face conversation that's necessary.
So, and the other thing, advantage of digital is it's standardized.
Right.
So, if you want to use the app and do a transfer, it's, amount of time and the process, everything is very simple and it's standardized. On the other hand, if you come to a branch, depending on the day, there could be a queue, there could be a queue, or there could be could be a delay, and it's difficult to standardize a branch, operations of that sort of operation in a branch. Digital, that is very easy. If you go to an ATM, the withdrawal time is more or less the same.
Sure.
So that is one thing. Then on the other hand, recently we have seen a drastic increase after this COVID and the economic crisis for the people to get into digital banking. I would basically not talk about the previous figures because it may not be relevant. In 2022, we had 80 million transactions through digital apps. In 2024, that increased to 165 to 170 million. Wow. So within a period of 2 years, so that has increased more than 100%. So that is how we are encouraging our customers to get into digital, because obviously that's the right way to go also, because even right now the cheapest bus ticket is 29 rupees. So you don't need to go to a branch, although we have 751 branches. So then you can get most of your banking requirements through our apps. And the other thing is, even having the branch network is also very costly. If I'm to look at from a P&L perspective alone, easily, there are a substantial number of branches. It doesn't make economic sense for us to operate. But as a state bank, and it's our national duty to maintain those branches, because if we close down those branches, the customers will have to go for 30-40 kilometers to the next branch. So we have that responsibility also. So that's what I say. Closing down branches immediately is, it's not feasible.
Right. Who are your typical digital customers? You said, digital or banking on a smartphone is something that I think young people are maybe used to. Is that your experience with People's Bank also?
See, young people, they do not want to come to the branches.
Right.
We know, because their lifestyles are different, their times are sort of different. So they prefer to do only on the apps and the internet banking. Even people in the age of 50s, 60s, we see they are moving into digital because they have understood is the convenience and the safety.
Should Sri Lanka move more aggressively towards becoming a cashless society? You do transactions electronically. Do you feel People's Bank is strongly placed to benefit from that transformation?
Of course, because we have about 3.6 million customers who are actively into our digital banking.
Wow,
So that
3.6
is
million. Okay.
the highest number of customers of any bank in Sri Lanka.
Sure.
So, I mean, it's a case of, moving from cash to digital. And then we have the largest debit card base in the country. We have about 20% share there. Credit cards also, basically, we've been quite active there. So, I think we are quite geared to go for digital ways of making payments. It's not going to be an issue for People's Bank.
So it's been a tumultuous year to be in leadership at a bank. A tumultuous few years because of Sri Lanka's economic crisis, then restructuring of debt, restructuring at state-owned enterprises, and then capital liquidity challenges, etc. How has this shaped you and your leadership, you think?
There are 5 ways I can answer this question.
Okay.
First thing is the difficult period that we underwent that was unprecedented. I don't think post-independence, not a single bank in this country faced the situation that People's Bank was in when we were in 2022 and 23. So it was like, your hands were tied and you were pushed into the deep end of a swimming pool.
You're saying this was unprecedented for People's Bank versus any other bank because your exposure to state-owned enterprises was very high at that point.
Yes. So what happened was during the crisis times, so being a state bank and we were called upon to open sort of import LCs for this importation of oil,
Sure.
coal, pharmaceuticals.
Right, and most of this was being sold by the government at a loss, so it just kept piling up.
Then what happened was there were some written assurances that the dollars will be provided on the due dates. Unfortunately, due to the issues at that time, the authorities were not in a position to support us. So we had a lot of foreign currency borrowings, LC commitments, and various dollar liabilities, even deposits, that we found it difficult to pay on a orderly basis.
Sure.
So then what happened was because of these substantial amount, so we had to take some drastic action. So firstly, we had to understand what other priorities are. So at that time, Shamindra, it was a case of stopping normal banking operations.
Sure.
So we faced the severe liquidity issues with regard to the dollars and the rupees. So we were basically shut down the lending.
So you didn't do any new loans to
New loans at
new
that
rupee
time.
loans to SMEs, etc.
At that time. So it was a case of mobilizing the branch network for the deposits of dollars and the Sri Lankan rupees. Unfortunately, dollars, it was more difficult because of this crisis. Rupees, our branch network was very successful. Within a very short period, we did not have any rupee liquidity issues. So that was the first point. Then sticking to basics and doing what is right. So basically, we were very transparent and we were very truthful with these counterparties, and we told them the background for this issue as to how we are going to address it.
The counterparties are the foreign counterparties?
Local and foreign also.
Okay.
So even then financial institutions, then these LC beneficiaries, and even some of the depositors. Okay. Then we sat down as a team and came up with realistic goals. It was a case of engaging each and every person and to come up with a repayment plan. Finally, I think we understood the real nature of business relationships. See, I would say vast majority of the financial institutions or the counterparties were very supportive. But on the other hand, there were some counterparties who were taking the maximum advantage. At that time, Shamindra, we were even generating dollars at exorbitant yields, because by way of swaps. So, and when we wanted to prematurely settle that, because of the impact to their P&L, they did not allow. So I think, personally, I think you need to be in a difficult situation to know who your true friends are. I think that's the case for the institution also.
Sure.
I think now within a 2-year period, we have come full circle. So I think we had to take some very tough and bold decisions. We took that. So timing is also of key. And the other thing is, you need to take decisions quickly.
Right.
Postponing or deferring that would be even more worse, because if you take 100 decisions, probably 5 or 10 may be wrong. But that is much better than not taking a decision.
Sure. Thank you, Clive. This has been a fantastic conversation.
Thank you, Shamindra. Thanks for the opportunity.